The best funds in 2022 to invest into. Investing is very personal and is very much down to the individual. Like, what is your risk tolerance? In today's video, we're going to start with risk tolerance to get your head into investing and what method is most suitable to you. Then we'll be looking at 5 of the best funds you can invest into in 2022. So, what is your risk tolerance? If you have an extreme risk tolerance, save like a madman, get a good lump of money, head off to Las Vegas and put it all on red. Please don't take this as advice. I'm just emphasizing an extreme example. Remember, index investing is where you put your money into a fund, an index fund. You and loads of other investors will pool your money into said fund, and all of your money is managed by the fund manager. The fund manager will pick a number of companies using the cash available. The fund will aim to match a particular index like the S&P 500. He or she will pick maybe 100 of the best companies within the S&P 500. If the overall return of the S&P 500 in a given year is 10%, the fund manager is looking to match that 10%. You can also go with a mutual fund where the fund manager tries to beat the market. Just be aware of the costs associated with mutual funds. A popular way to invest is having a low cost index fund, and many investors go with a 60-40 split. That's 60% stocks and 40% bonds. Now if you go 100% stocks, you're said to have a high risk tolerance, a very high risk tolerance. The more conservative, less risk averse investor will tend to go with some bonds and might go 40-60, and this is 40% stocks, 60% bonds. Basically, if you're in your 20s, you have time in your hands to ride the inevitable ups and downs of the market, and you might go high risk, 100% stocks. But if you're in your 50s and have accumulated a big pot like 500,000, you're going to want to preserve your money. In this case, you're going for the safe option and will include some bonds in your allocation. Currently, my index fund is 100% stocks. I was 80-20, but I don't want any bonds when inflation is so high. But that's a different topic for a different day. Right, let's have a look at some of the most popular funds in 2022. The Fidelity Zero Large Cap Index. This fund invests in common stocks of large cap and is designed to reflect the performance of US large cap stocks. Large cap companies are huge companies, huge names like Apple or Amazon. Typically, they're fairly stable and have low volatility. A big plus with the Fidelity Zero Large Cap Index is that it's a zero fee fund, meaning Fidelity are managing your money at no cost at all. Now, if you decide to buy this fund, you will own a small slice of several US stocks. It has around 2,500 holdings, so that's you with 2,500 small slices, and this makes it hugely diversified. The fact that costs are low means that this fund is ideal for beginners who are looking to keep costs down. The only costs associated with this fund are the costs you need to have with a Fidelity brokerage account. Personally, I think it's worth looking further into. Moving on to the Fundsmith Equity Fund. This fund adopts a long-term buy and hold approach to investing. The portfolio consists of businesses likely to compound in value over the years. They are selected with criteria such as fundamentals, competitive advantage, and attractive valuation. The fund manager is Terry Smith, who is a big name. It's a good idea to do some digging and find out who the fund managers are when you look at funds. Some of the companies that have made this particular fund include Microsoft, L'Oreal and Pepsi, and these are really successful, established companies that have been around for many years. Fundsmith have been hugely successful over the years, and it's a fund worth considering. The fund is the most popular open-ended actively managed fund in the UK. And between 2010 and 2021, it has achieved an annualized return of 18.4%, which is very impressive. The next fund is the Life Strategy 100 Index Fund, and this is a Vanguard fund. As the name suggests, this is a portfolio made up of 100% shares, and this is one of Vanguard's life strategy funds, and because of its 100% exposure to stocks, is seen as high risk. All of the life strategy funds are suited for long-term investing. Just to be transparent, this is the index fund that I currently invest in. If you fancy getting involved with the Vanguard life strategy funds, life strategy range of funds, there are 5 funds to choose from. Life Strategy 20 is made up of 20% stocks and 80% bonds. The other 4 are Life Strategy 40, Life Strategy 60, 80, and the fund I went for is Life Strategy 100. Just for clarity, if you went for Life Strategy 80, that is 80% stocks and 20% bonds. Hopefully, I've driven this point home. I initially decided on a Life Strategy 80 fund for some balance, but I've since had a change of heart. And this is because bonds, I don't want bonds during periods of high inflation. And I wanted to move away from bonds for this very reason. The costs associated with Vanguard funds are very low. And this is what caught my eye when I was researching suitable funds back in 2019. For me, any Vanguard fund is worth your consideration. Read up on John Bogle, who is the founder of Vanguard, and I'm confident this will pique your interest in this beast of a company. They have over 7 trillion in global assets under management, so it's clear that many investors trust Vanguard with the hard-earned cash. Right, next is number 4 and is the Vanguard Total Stock Market Index Fund. This is a diversified fund, as you'd expect with any index fund, to be honest. It has a good history of returns and provides a dividend so you can reinvest. This fund tracks the CRSP US Total Market Index. It holds a mix of large, mid and small cap stocks with a mix of growth and value stocks. Simply put, the goal is to provide exposure to the entire US stock market. As expected with Vanguard funds, the costs are low, which is an obvious benefit, as I've already mentioned. This is another passively managed index fund that would be suitable for many investors, a set and forget way of investing that is more suitable for long-term investing. Overall, an excellent fund for beginners who are looking to minimize risk and be paid a dividend at the same time. If you're on a tight budget, the initial investment might be a stumbling block, as you must invest a minimum of $3,000 when starting out. Do some digging and see if this fund is suitable for you and your investing strategy. The last fund we're looking at is the Vanguard Growth Index Fund. This is the 3rd Vanguard fund I'm reviewing, so 3 out of 5 shows my bias towards Vanguard. Remember, this isn't me dishing out financial advice, it's just a bit of info to give you an idea of some of the better funds worth consideration. It's designed for the long-term investor. You get exposure to companies that are expected to grow faster than the average company in the market. It's a diversified basket of growth stocks, predominantly large US companies. Some of the holdings include Alphabet, Amazon, Apple, Facebook and Visa. Now, if you like big tech companies, this might just be the fund for you. Don't be scared off by this year's returns of minus 15.24%. It's returned 6% over the last 5 years and 8% over the last 10 years. With most index funds, I would expect 7 to 8% returns on average over the long term, like 10 or even 15 years. Now, just to finish off, education. Please work on your financial literacy before attempting to invest in the stock market. And remember that your investments are your responsibility, not your friends or your family who told you about how they invest. I just want to finish with how I'm thinking about the future. Now, I want to get involved with disruptive technologies over the next few months because the future is coming, and it's coming fast. In an upcoming video, I'm going to be talking about how me and you can invest in the future. So on that note, subscribe to the channel so you can get all of my latest videos, and that'll include how you can invest in the future. Now, if you've liked today's video, give me a thumbs up, and thanks for listening.